YouTube, what's going on? What's going on? So, in today's video, I would like to show you guys my indicator that I created. Um, I'll show you. This is going to be a random back test. So this is not a cherry pick. I'm going to cherry pick the back test and go from there. No, look, see this right here? This is a random bar, which means I randomly went back in time. So I'll do it again actually. I'm going to do a random bar, randomly select. Okay. So as you can clearly see, now we are in 2011. So this is when Apple was $10, right? So this is going to be a random back test. So you guys can see how my indicator works. So the way it works is pretty simple. I'm going to give you the basic of it. There's other little tweaks you can do to limit your losses and stuff like that and have even a better risk management, right? So the way it works is once the indicator prints the RGR or a GRG, you enter the trade at the next candle with the stop loss would be above, like right here, for example, it would be right here. So for this one, you'll enter basically when this candle closes and you enter into the next trade with the stop loss above here, right? So that's basically how it works. So let's do a random back test, right? And I do options, so the result would be option based. So once I enter the trade and I'm playing an option, once I'm in profit, I will set my stop loss, as quick as possible. So let's do a random back test. So the back test was only going to be during market hours. So the time frame that I'm going to be using is the 30 minutes, but it can be used on 15 minutes, 4 hours, 1 week, 1 month, 3 months. And my favorite is actually the 6 months to buy leap options. So I have a couple stocks right here that I'm waiting for next year play. Yeah, this indicator is that good that it can actually predict the next year type situation, which I'll make a video on a couple plays that I'm watching to see um, the next year play um, for buying leap options. So leap options and leap puts, by the way. So let's go over it now. So let's go. This other indicator that I'm using, it's not part of the strategy, but basically it's there for me to know when the stock is overbought or oversold, right? So as you see, GRG printed, and then the next candle will enter with the stop loss below it. Yeah, but that doesn't matter because that's pre-market. So let's go to 9. My favorite is actually 9:30 candles. So you wait for the candle to close, this candle to close right here at 9:30, and then the market opens at 9:30. So let's say the GRG printed red on this one, then you'll enter into a put. That's what you would do. But let's see. All right, let's go over it. Nothing is printing. Nothing is printing. Nothing is printing. Okay, there's no trade for that day. Nothing printed. So let's run through the pre-market. Let's open up back as you can clearly. Oh yeah, this is perfect. So the way it works, as you can clearly see, right? Pre-market, you got the GRG printed green right here. You enter the trade into the next candle, and as you can clearly see, it went against you, but your stop loss is actually down here. And then it printed again. Market opened at 9:30, so you went long 9:30, and then bam, massive win right here. It's a massive win right here. And the way on okay, some of you guys might be wondering, does the indicator repaint? So I'll give it a scenario on how it works, right? So you see this green candle, it's purple, but green candle, red candle, then green, right? This GRG will start printing this green candle, this green right here, while the candle is pushing up, as it's waiting for it to be confirmed. It You only want to enter when the candle closes. In between there, yes, it will repaint, but it's more like a risk. Like once it starts to say DRG starts sprinting, if you want to enter the trade early, you can, but it is a risk. Best to wait for the candle to close, okay? But if you want to be aggressive with it, yeah, technically, once the GRG starts printing, you can enter the trade, but that's risky. Anyways, so as you can clearly see, this first one right here, massive win. You'd have entered right here and just kept going up, right? So let's keep going. Keeps going. Okay, now we're in pre-market. Let's go to 9. All right. Right here. Let me hide that real fast. All right. So let's keep going. Nothing is printing. Okay. You see right here how you see how it flashed? That's because it was trying to print a red down, but it did not get confirmed. So it didn't stay there. You have to wait for the candle to close. All right, nothing was printed on that day. As you see, pre-market, you enter a put at the close right there. So that's a slight win right there, but again, pre-market doesn't count. All right, so market's about to open. I love it when it prints it right here and the market opens. You can get like a quick knowing exactly what direction. Now you're not gonna win every time, but you will have an idea of what to do, right? All right, so no plates that day. There's nothing. So it does keep you safe too. You know, it does keep you safe. Again, the next day, nothing is printed. So this is basically a continuation type situation. So when it prints the green, it's continuation of the trend, right? So it's basically looking for a trend to continue. So this is why you don't get a lot of signals, right? But when it does print, as you can clearly see, another pre-market win, right? All right, so it prints again, right? GRG prints, open up. Actually, this one at morning, it wasn't this one, but 9:30, candle close, you enter, bam, it's another win again, okay? That's another win right there. And remember, this is 2011, right? Now, this is where okay, the candle printed again, right? And you enter in on this candle at 11:30. But this indicator you see that's pushing up says you're pushing it too much, like it's overbought. It is overbought, right? But if you had entered into a call option right here, it still would have been a win, right? But you're definitely in an overbought situation. But yeah, so overbought zone for me, yeah. So that's why sometimes it can be right and wrong at the same time, where it is a continuation, but it's just too overbought. All right, so let's go again. Let's do 2 more days and let's see. All right, let's do 2 more days to see if any more signal is printed. No, nothing is printed. Nothing. So there's nothing printing again. All right, so another day. So this is another day again, right? Remember, this is in 2011. This is old data. Printed green, you enter, bam. So that's what, 3 for 3, not to mention a couple pre-market wins. So I'm gonna do something else real fast, and I'm gonna show you how powerful it is on the 1 year, right? Because we just been kind of doing it on the small time frame. Now imagine using this on the large time frame. Look at this, printed 2009, and then look at this, bam, you would have put by a leap option, bam, that's 1 year, 2 years, right? So it can get, I'm trying to fast forward, but this is a year candle, so it can take a little bit of time. Let's see if I can speed this up by doing this, but I'm gonna let this play out. But as you can clearly see with this indicator, you can seriously make some real money without sitting there all the time waiting for this and waiting for that. You just can take it's just basically, I'm going to trust this indicator to do what it's supposed to do, okay? So yes, you can win and you can lose buying a leap option, but when you have a nice win, you have a huge win. So when you use this on like the 12-month time frame, you can have massive wins on those time frame. Let's say you get a stock that has a cheap, a stock that's not very expensive, right? And you see this prints right here. Like you see this option prints that says, oh, continuation for the next year. What you would do is you would buy a leap option for the next year. Let's say the leap option costs $200 or $300, and you're like, okay, I'm gonna buy this leap option for $300 for 1 year to be wrong. It's a lot better than buying these 1 day options that you lose $500 in 1 day versus taking a chance on something for 1 year to lose. 1 year, guys, you have 1 year to lose, and if you win, that $300 could turn into like a tremendous amount of um a tremendous win. I'll give you guys one play that I see for. See this right here again. Guess what happened? It's for 2023. What do you see here? Printed. Now this is where things do get tricky. Is you enter in 2024, but it went against you a lot. Like this is a lot to enter at 192 and then drop all the way down to 163. But guess what? It went all the way up to 200 and change. That's what a leap option is, you know, because this can happen. So when you enter the trade, I would enter like I'm willing to lose all of this money, but the win could be humongous, humongous. So I'll give you guys a next uh thing, right? An next play that I'm watching very, very, very closely. T. What do you see here? What do you see here on in T-Mobile? Right? So when I say you can buy a leap option, take chances, this is what I mean. This candle closed in 4 months and 4 days. I have to wait because you never know what can happen, right? But in order for you to even get kicked out of this play, the stop loss will be down here at $12. So unless T-Mobile is going to go all the way down to $12, I mean, come on, it's at $19. You know he has plenty of room to run. So look at it. Let's go back in time and see every single time it's printed. It printed in 1991, and look what happened. It printed in 1997. Guess what happened? It printed in 2006. Guess what happened? But buying every leap option that you have bought would have been a win, every one of them. So obviously, I'm going to do the same thing again in about 3 months. I'll give it like 3 months, or by like end of October, or maybe enter the trade a little bit sooner, or wait. I'll wait. I'll probably wait until January or this end of December before I enter the trade. But that's simply how to use my indicator to make massive wins buying leap options. And let's say that this one doesn't work out. I have a couple other trades where I can buy leap options with them, and the odds of losing is so small that all I need is just one of them to win like 2, 3, 400. It could win 400, 500% on these options, because from here to here, look at this. From where you entered to up here, that's 24% win right there. From this one right here, this is a 44%. I remember you're buying option. That's like 600% return. So let's say you have 3 stocks that you're looking at for next year's swing trade. If 2 of them most likely going to go your way and one is not, and those 2 can become like make you a lot of money. But not to make this video too long, guys. See you guys in my next video. All right.